AT&T.
Especially in the short term, absolutely. Yeah, AT&T.
I mean, that's a company we have in our portfolio. And for me, I was a little early on it because I knew that when they spun off this Discovery, Time Warner, it was going to be huge for them. But it took them forever to do it. So when they did that, AT&T, they spun it off and they generated $40 billion in cash from that spinoff. And they had, I believe it was something like $25 billion in short-term debt. So now you have no balance sheet concerns. You're looking at a stock that pays, a nice yield of almost 6%. That's perfectly safe. You're generating free cash flow of $17 billion a year. And now you're looking at the growth statistics. I mean, I'd rather own the AT&Ts. It's a perfect stock for this environment, but there's just so much more of that story. And that's how you should be looking. Do you want to buy Microsoft here? And don't look at AT&T like you looked at it in the past when it was a crappy company. It never grew. It was terrible. These guys are in a perfect environment, growing their earnings, laying fiber everywhere. I mean, this is a really fantastic story with AT&T and the C. And the street it agrees, right? I mean, the stock was up like 5%, 4-5% today on a down day after earnings.
Yeah, and to your point, it's got a good streak of adding phone net adds. Some of the way they describe these are pretty funny, but they have 12 straight quarters with more than 200,000 net adds. To your point, fiber is the big growth thing. This is a free cash flow generator. What I like about AT&T is that it's very boring and it doesn't have any respect yet. We've talked about this transition. The forward PE on FinViz with AT&T is around 8. So to your point, Microsoft is still a premium to the overall market. AT&T is a huge discount to the overall market. It's paying a much bigger dividend than the overall market. And it's actually growing on those earnings per share. Now, the market, from an investor standpoint, I'm the same way. I want instant gratification as well. The hardest thing to do here is be patient because you're getting paid to wait. The market is going to turn, but turn slowly. And to their credit, yes, the spinoff took a little longer and all that kind of stuff. But after years and years and years of underperformance, there's no reason to just flip the switch and give them all the credit. That's not how the world works. Mm-hmm. But they are putting up, like I said, the ads are good. This is just a great, boring company because you have a good story on why you think they're going to grow even more because of their new sales tactics. But again, this is a buy and forget about it. What's exciting to me from a quote unquote younger analyst and investor is these are going to be the growth stories going forward for at least the next couple of years in this high inflation environment. And I don't want to say easy in an arrogant way, but the average Joe can now buy solid companies like this when fundamentals matter and compound their capital at a competitive return during a terrible time in global markets. That I'm not doing any justice, Frank, to get people excited about that as I should be, but we'll practice on that over time. But this was a solid quarter, and for it to go up 5% on a down day, is the market overall still down? I'd assume it is.
Yes.
So this is a 4 or 5% stop in the face of a large headwind after a huge rally and everything. It's participated in the rally as well. This is a buy and forget about it. Throw it in a box and bury it. Frank.
Here's the thing. My story with AT&T. So I just built my new house. I'm going to be moving in there 3 weeks. Finally, man, stressful. It's crazy. It's not building your own house. It's great. It's a good thing, but man. So we got internet service, and AT&T has fiber there. Now, AT&T's been aggressively laying fiber for a long time, and it's a difference maker. Because the fiber is now they're giving you 1 gig, where Comcast was like, whatever, it's 200 Mbps, right? And you go to 400, and they say, well, we can offer 2 gigs in some spots or whatever. I have Comcast here. I pay $500 a month for my Comcast, okay? And that's business, right? So this is residential, and if you don't know the difference between business and residential, it's very simple. They automatically charge you 2 to 3x just because you're a business. That's what Comcast does. But even regular Comcast it's going to be at $200 just to get, fast internet speeds, and their fast internet speeds are half as fast as AT&T. Overall, they do have places where they're like, oh, we have 2 gigs or whatever, and AT&T goes as high as 2 gigs as well, but everything's like the average and like almost the lowest part is 1 gig. So now I'm getting super fast internet. It was $89 just for the month. No monthly contract, won't get raised, and I can cancel whenever I want. So as they're doing this, and it took 4 hours to do it at my house and everything, and going, again, it's a brand new house, so they're just looking for all the wires and stuff like that. They have another guy come in and say, hey, I'm part of AT&T. And this guy starts pitching me. I have Verizon as my phone service. And he's there going to every house, and this is their strategy, AT&T, and you could tell it's working because I don't know if you saw, very weird, right? I mean, you always saw these net ads, right? Or the declines, right? You always saw the declines, but now they're with the fiber accounts, it's 280,000 fiber net ads, 12 straight quarters with more than 200,000 net ads. So where they have fiber, people are getting it because it's cheaper than Comcast. It's cheaper than the other services, all the cable companies. But what they're doing in the 656,000 postpaid phone ads, it makes sense. Because if you look at 280,000, a lot of these people on family plans, this guy came in, said, what are you paying for Verizon? I told him what I'm paying. He's going to beat it by 20%, lock me into a long-term contract where it's not going to raise the prices, and said every phone that's not the 14 will upgrade for free. And he goes, look at our service. And I have my phone right there. He goes, you see this? This 5G, you're on LTE with Verizon. I mean, so I'm going to switch. Why? Because it's faster, it's cheaper, and I just got the new 14 because I had an older phone. But my wife and 2 kids have the 12s, right? I think so. But they're going to get it for free. So now you're seeing these postpaid phone ads. They're laying the fiber. They pay that money. Their balance sheet is incredible. They have enough money to spend. They're going to continue to lay the fiber. This is a company that's not boring. This is a company that's actually growing. I mean, 656,000 postpaid phone net ads, nearly 2.9 million for the full year. Are you kidding me? 12 straight quarters, more than 200,000 net ads for fiber. I mean, you know, they offer a tiny bit of downside guidance, but it didn't matter because the stock's trading at 8 times forward earnings. So when you compare this at 8 times forward earnings, a company that's growing, expects to grow earnings and sales, they're seeing those net ads. Their balance sheet, $17 billion in free cash flow constantly. Or do you want to buy Microsoft at 3 times the valuation, not growing earnings year over year, barely growing sales, and warning, right? If you listen to the difference in the conference calls, listen to what these guys said. I mean, CEO went on there. He goes, made real good progress on restructuring. Customers are willing to pay more for services because of better performance, which is me. 5G enhancements will come to automotive, industrial, and medical sectors, which are massive markets. He thinks customers will be more deliberate about replacing handsets. He expects inflationary pressure in 2023 with more of a moderated growth environment. And they just signed a big fiber joint venture with BlackRock, which they talked about, reduces the risk, but it's going to expand fiber even more. And BlackRock, again, with the getting
joining the dark side, Frank, if that's not a bullish argument to buy right there, that is.
Just the BlackRock.
Exactly.
BlackRock's looking for something after all those REITs and holy cow. I mean, they're really like,
imagine the
shenanigans
going
like,
on
nope,
there.
you can't have your money back. Sorry. Okay. Good luck. But you know, that's a difference, and that's how I want to teach you. And Daniel, I know you want to teach like investors, where instead of looking at Microsoft, instead of looking at trying to buy these things on a pullback, when they're all reporting and they're laying off employees, AT&T's not laying off anybody right now, right? I didn't hear any layoffs in the past few months.
That's right.
They're growing. Everything's like, and you're doing it in an environment where you're going to generate that cash flow. These are people, nonstop payments coming in, right? Nonstop cash flow. These massive cash flow generators, $17 billion. And this is going up in the next 5 years easily annually. What are they going to do with that? They're going to buy back stock. They're going to return to investors. You have a 6% dividend, and you have a company that's growing. What do you want to own? You want an AT&T or Microsoft? It's a different environment. You got to look at this differently. In the past, interest rate 0, growth stocks, doesn't matter. Balls to the wall, buy them. They come down, buy them. But it's not that kind of market anymore, where the AT&Ts are going to do fantastic going forward. I saw Verizon's. By the way, Verizon's CEO impressed the hell out of me in CNBC. That guy was pretty incredible in that interview. He was great. I just think AT&T is really surpassed them and looks much, much better going forward. But that's how you want to look at different ideas. Mm-hmm. Okay, which one do you want to own? Well, this one I'd rather own. They're not both technology stocks. It's not like I'm owning Home Depot instead of Lowe's, but they are both large cap stocks, right? I mean, they both pay dividends, and this pays a higher dividend, growing faster, much more growth potential. And again, Microsoft is just warning and being cautious, and I love Microsoft is very open and honest about it, which is cool because you don't see that from all companies.